let's make something really clear. I think the IMF report that came out, that did just, it had the organization basically joining the street consensus. So a lot of knee-jerk reactions today with that, but nothing new under the sun with regards to what they said. But yeah, the Chinese data, no worse than feared. I know there's a lot more coming in October, but yeah, it seems like the street has had a chance to let this resonate and realize that, you know, they've almost built in a hard landing for China, and it just might be more of a volatile or turbulent one, but a bumpy one, but not a hard landing. So yeah, it seems like that has helped risk assets quite a bit, especially over the last 4 trading days.
Do you think the market, I mean, we know obviously China has been such a concern, but do you think the market is now starting to factor that in, given, you know, the slowdown that we are expecting to see, and it potentially might not have that huge effect that we've been seeing recently?
Yeah, I think so. I think overall, though, the market is just searching for a catalyst. I mean, when you think of at least a U.S. market that has bounced back 6% in 5 trading days, it's hard to look for a reason why. Nothing in particular sticks out, but I think it's just overdone on the downside, and now it's just finding a level. I do believe very strongly so that between now and the end of the year, the market is just desperately in search of a catalyst to make that next move either higher or lower.
What do you believe that catalyst might be? I mean, a lot of our guests we've been speaking to, obviously with the Fed in the background somewhat, but fears around China calming down. A lot is saying that the next focus will be on third quarter earnings season. What do you think is going to be the catalyst for markets?
Yeah, you know, I think the hurdle for the earnings season is so low that I think it only could be an upside catalyst. But bigger than that, I think there just needs to be macro calm coming out of the emerging markets, you know, China, of course, and realizing that their landing is going to be manageable, their devaluation's manageable, things aren't as worse as feared, but I think the market needs to see that, see some justification before making that next move into liquidity, or, I'm sorry, after risk assets.
Larry, I wanted to ask you about the market today, certainly taking a bit of a breather, which is probably not surprising after the remarkable rally in the last 5 sessions. A lot of the headlines, though, pointing to the weak US jobs report, which has obviously pushed out those expectations for liftoff. Do you think those gains, though, can be put down to more than just the Fed?
You know, I think so. And, you know, that number, that labor report number was bad. And it does put a lot of pressure on that next number to be at least decent. Yeah, right now Fed futures are implying a 10% chance of an October hike, less than a 30% chance for December. It's pushed all the way out into June. I don't believe that. I still think we're going to see it in December, but again, I think the market is very confused on how to view this, and people just aren't grabbing after risk assets as they once were.
Certainly does make it difficult, I guess, for the market to believe in a rate hike this year, doesn't it?
Yes.
Recently, Larry, we've seen the market testing those August lows, but we've seen this pretty powerful rebound rally since then. Do you think this is likely to continue? And take us through some of the specific levels that you're watching on markets.
Yeah, you know, I think like that 2,000 level in the S&P 500 is crucial. Not that I'm a technician, but it seems like a lot of momentum right here. The market seems like that's a magnet. But yeah, earnings season that has started, but won't become meaningful for the next couple of weeks. I do think that the downdraft we had, we saw that snapback rally with a lot of social buying, we call it, a lot of reluctant buying, people chasing the market, and something they've done for a long time. I do think Glencore, it's hard to underestimate the bounce back that stock has had, and I know it's just one company, but we are so worried about the commodity industry in general. So to see that snapback surely has helped a lot in confidence for people in the stock market.
I wanted to ask you, I mean, across the commodities complex, but in particular Glencore, overnight we've seen that roller coaster ride, I guess, continuing. We saw management trying to reassure investors they will remain financially robust, but those shares overall have seen a massive bounce off their lows, which is really a reflection of market sentiment than anything else, isn't it?
Yeah, I do think it is market sentiment, and you know, if I was an investor, I would just stay clear of something like that until the dust settles. Let somebody else have that volatility or that fun or pain, whatever you want to call it, and miss the first 10 points of a move, of a meaningful move. Like right now, it's market sentiment, and I'll tell you what, it's very skittish. It can turn on a dime, and we've seen that happen just 5 trading days ago when we were stuck 6% lower than we are today with no real reason on why we've rallied.
I wanted to ask you as well, the Bank of Japan meeting today, I guess expectations we won't be seeing a change in policy, but given emerging market and global manufacturing growth conditions have deteriorated further, do you think we can expect more quantitative easing from Japan?
Yes, but I think they're going to do a really good job of holding their breath until the end of the month, and they'll probably do something at that point, waiting for more data flow. I don't think the Bank of Japan wants to be viewed as being too reactive to things. However, it's hard to look the other way when they have as much disinflation that they've seen. Wages have decelerated. They have every reason to ease tonight, but I don't think they will until the end of the month when they have their second meeting.